From Adversity to Abundance, hosted by entrepreneur and seasoned real estate investor Jamie Bateman, is the ultimate guide for active and passive investors seeking clarity, mental fitness, and the confidence to make inspired decisions in the world of real estate. With a decade plus of investing experience across various niches and a background as a combat veteran, former Army officer, and multi-million-dollar mortgage note company owner, Jamie brings a wealth of knowledge and inspiring stories to each episode. Through weekly episodes featuring insightful interviews with industry leaders and solo explorations of mindset and strategy, listeners will uncover actionable advice and tips to overcome challenges and build lasting financial success. Whether you're a seasoned investor or just starting, From Adversity to Abundance is your roadmap to turning obstacles into opportunities and achieving financial freedom.
Welcome, everybody, to another episode of the From Adversity to Abundance podcast. I am your host, Jamie Bateman, and I'm pumped today to have with us Lane Kawaoka. Lane, how are you doing today?
Hey, aloha everybody. Thanks for having me, Jamie.
Absolutely. Lane is the author of The Wealth Elevator and also is a very experienced real estate investor. Lane, I think you've invested in over $2 billion in real estate. Is that right?
Yeah, you added up. But I think today we'll kind of talk about, the starting phase, right? That's the hardest part. Once you get past a billion, it's kind of easy after that.
Absolutely. So before we jump into your backstory, like you alluded to, let's talk about, for the listener, some of the abundance that you're living in. Excuse me. You just mentioned is kind of easy in certain ways. So speak to the abundance. What has financial, what has wealth and the financial situation that you've been able to put yourself in? What has that done for you from a day-to-day standpoint?
Well, I mean, it's kind of put me in this echelon, just like with many other business owners out there that, make over a million plus in revenue, right? I think there's a lot of people like that who have their organizations are, a couple of hierarchy floors, and just kind of living. I truly think that's the American dream, right? Where you work for yourself and you have a team that you can lead and mentor, and you go out there and you kind of rinse, wash, repeat a business process that works, right? That, makes money and provides value to customers, in this case, investors, and you kind of just keep building on something that where you have traction on, right? That's a key word, traction is something that
Sure.
works.
Absolutely. So, and we will jump back in just a second. So give us a little more context as far as maybe a day in your life or what a week in your life looks like.
Yeah, I mean, I've kind of found out that I need to kind of focus on what I do best, right? Which is, one of many things that got me here was building connections with other partners, vetting deals, analysis, talking to investors. Um, I focus on what I do well and what I like. If things bring me pain and are kind of annoyance,
Hmm.
like some of the putting P&Ls into and rent rolls into spreadsheets.
Hmm.
We hire that out or take a lot of that it's overseas, right? Some of more of that tedious stuff.
Sure.
But it kind of takes away a lot of the bog of doing in the beginning days. You had to do everything. I was all by myself.
Yeah, absolutely. No, you definitely don't always have that the luxury in the beginning. You've got to wear many, many hats for sure. And to your point of focus, I just had an episode just came out on our show with Ben Reinberg, and he's done quite a bit in commercial real estate, specifically the medical office space, and he said over and over on his episode that you get rewarded for focus. And I think that rings true for both the active and passive investor as well. But let's jump back into your backstory. I know you were an engineer for many years, and then made the transition into from more of a passive real estate investor into active real estate investor. And I think you're both a passive and active investor now. But what was the internal dialogue like for yourself, and what led up to that change for you?
Yeah, I mean, I was kind of on this linear path of just a regular guy. I had a 3.5 GPA in undergrad and became an engineer because that's what we're all brainwashed to do. Go to school, study hard, do the
Yeah.
401k thing, max that thing out, and then, still on that escalator of wealth, which isn't
Hmm.
bad, right? Which is better than most people.
Sure.
Bought a house out of college to live in because that's what we're all taught to do. But then because I was traveling all over for work, my construction projects, I was never home.
Mm.
I just started to rent it out and I was like, whoa, what is this cash flow thing? And this is
Right.
back in 2009, 2010,
Okay. Nice.
and bought another couple units in Seattle. And then, that was 2012. And then by 2015, I had 11 rentals. And that was
Wow.
kind of that first stage.
Sure. That's awesome. In time wise, we actually have somewhat of similar path. I got into real estate investing in end of 2009, beginning of 2010, and then didn't really ratchet it up until 2015, 2016, with single family rentals as well. But yeah, it's interesting you say that about the 401k being essentially the only, savings plan or investment plan, retirement plan that everyone thinks of for the most part, right? And I've heard the guy who helped draft the code for the 401k on different podcasts, and he's said that he never intended for the 401k to be the end all be all as far as retirement goes. So we just all think that that's what it is, and that's how you. It's really the only choice you have. But we obviously have a lot more control than than what we're, like you said, what we're brainwashed to believe. So, okay, so you started to understand and see in your bank account. It sounds like the income that was coming in from renting out your first place, and you started buying additional rentals, and then you said you got up to 11. What was going on at that point mentally for you?
Yeah, I mean, the first few were in Seattle, which is a more of a primary market where you don't really cash out on those primary markets.
Sure.
So I switched to buying in, Birmingham, Atlanta, Indianapolis. More importantly, remotely, right? I got
Mm.
over that fear of wanting
Yeah.
to feel it, touch it, be right next to the property.
Right, right.
And I just started to realize like, wow, I'll just stack them on top of each other.
Yeah.
I was starting to make more income than my boss's boss and, those guys. And that was kind of where, I mean, quite frankly, Jamie, I became a crappy employee, right? Like,
Yeah. I
I
can
think
relate to
this
that.
must have been around 2013, 2015, where I was kind of like, I mean, I, I wasn't like the new guy anymore.
Hmm.
If I was in the NBA, I'd be called a veteran at this point in my career. Still early
Right.
stage, of course, right?
Yeah,
But
yeah.
I I was just like, man, this is like a lot of work, and I don't know if I want to work another 10 years to finally get promoted,
Sure.
to over 120, 150 grand.
Hmm. Right.
And that was like, is it worth it, right? And
Yeah.
ultimately, the line is like, do I want to get paid 10 to 20% more for 50 to 100% more BS
Mm.
and managing people too? And that's,
Right.
I don't know, man. That doesn't sound like a good deal to me.
Yeah.
So I
Yeah.
was just like water flowing down a mountain. This buying more rental properties just seems the better way to go.
Hmm.
But as you alluded to, 11 rental properties is somewhat easy, especially,
Hmm.
I mean, I had property management, right, to do the dirty work,
Yeah.
but it was it was very difficult when you get past that stage because with 11 rentals, just to give a sense of what that's like, maybe that's a few $1,000s of passive cash flow a month. Not bad,
Hmm.
right? Not going to complain.
Right.
But with 11 rentals, I had maybe an eviction or two every year, some kind of big catastrophe that happened every quarter that resulted in a semi bigger repair bill. And, I had to stay on top of the property manager to kind of get it done. And it
Sure.
just was like, well, most of my clients, they aspire for five figures of passive cash flow. So if you do the math, I'm going to need 30 or 40 of these properties.
Right.
And it's just the exception rate's going to triple, quadruple too. So now an eviction every month, some kind of big issue happening every freaking couple weeks.
Right.
It's
Right.
just not scalable.
Sure. Understood. Um, okay, so it's 2013 to 2015, you aren't the best employee, and then how does that transition actually come to fruition as far as leaving your W-2?
Well, I mean, I know we were talking earlier, kind of the people listening out there, kind of maybe at this stage. I
Yeah.
mean, what I also started to do is I started to pick easier jobs. So started to work, my first job was pretty hardcore private company.
Hmm.
I wanted to get paid more. And that was important at the time, right?
Hmm.
Getting the
Right.
most pay. And plus I didn't have a family, so screw it.
Sure.
Whatever, work all
Yeah, you have
day.
energy, time, you need income, grind it out, right? Work hard.
Right.
Yeah,
Right.
makes
So
sense.
then I switched to more easier jobs working for the government. Luckily, Elon wasn't doing the Doge thing back there.
That's funny.
But but then that started to just start finding easier and easier jobs.
Yeah.
One funny thing happened was I actually enjoyed working for the peers and the people I started work for.
Yeah.
So that was
Uh-huh. Oh,
cool.
right. Sure. Right. You maybe didn't have as much pressure on yourself from a professional standpoint, so you could kind of enjoy the day to day and the moment by moment, right?
Yeah, I mean the first company was very competitive,
Yeah.
right? With your peers. But
Hmm.
I call this the triangle in your career where you like what you do, you like what who you work with, your
Hmm.
peers. You usually can survive pretty well with two of those three in place.
Mm, sure.
If you got all three, well, screw you, right? You don't need to, you're happy, right?
Right.
But I didn't really like what I did. I didn't really care for people who I worked for initially and worked with. So I
Hmm.
was kind of, that pain created that inspiration to learn about real estate,
Yeah.
to devour these podcasts,
Right.
to
Right.
save money.
Right.
I was saving like 50, 100 grand per year to plow into
Wow.
rental properties
That's
in
awesome.
those earlier years.
Yeah, I can really relate to a lot, and I don't want to take over the episode, but I worked for the government for a while as well, and just it was kind of Groundhog Day, and I did like the people I worked with and worked for, but it was just never ending, and I wasn't gonna really reach that level I wanted to without taking ownership. So I would use my commute time to listen to podcasts, and and then I started to just make a mental shift in 2015 for me. Just how do I take ownership of this? There's got to be something more than this. It wasn't that I had this extreme pain and I couldn't get up and go to work every day. It's just there was no end in sight, and it just was it was okay, but I was becoming worse and worse as far as an employee goes, and eventually I did a slow transition over 7 years actually, but 7 years working part time. But um, okay, so what year did you actually quit, walk away from the engineering world?
Well, I mean, that was probably 2018,
Okay.
but I probably would have, I mean, this is, I think, the important point. I probably
Mhm.
would have been still at that day job if it weren't for, I had started a podcast back in 2016, being one of
Mhm.
the more OGs of the
Yeah.
podcasting
Yeah.
scene. And, just a lot of it is luck, right? Right timing. There
Timing.
wasn't very many podcasts back then, but I was able to build up a community of other passive investors
Hmm.
which helped me kind of start the business. But I, looking back, probably would have been content just staying where I was at, and just at that point, I was getting a kind of like a third paycheck every single month. So that was probably more than enough to buy, 40, 50 grand down payment on a rental property every single year.
That's
So,
awesome.
and of
Yeah.
course that's already hitting the hockey stick
Hmm.
on the graph already.
Sure.
So I probably would have been, fine just hiding out at work. I mean, at that
Right.
time, had like a Mercedes, the government worker driving to work, taking calls on the side here and there.
Hmm.
Um, it was kind of a chill time in life. I kind of look
Yeah.
back at that time and it's like before jumping into entrepreneurship, sometimes I wondered, should I really have done that, right?
Right. Entrepreneurship has a lot of ups and downs and a lot of
It
challenges.
is the new rat race, is what it's called, right? Like, yeah,
Mm.
you aspire to this world that you control, but
Hmm.
it's just now the stakes are a lot higher. And
Yeah.
yeah, again, question like, it depends on what you want. Don't just chase ego on being
Hmm.
the business owner because it's not all cracked up to be.
Hmm.
Nothing's better than having a nice W-2 salary where your expectations are low, where you
Yeah,
can make a
right.
little passive income on the side in your own side gig.
Sure. Yeah. No, I love that. And I love the approach you're taking because I agree that it's not a one size fits all. And right now in today's world and on podcasts and things, the word entrepreneur is such a sexy buzzword and it's cool to say I'm an entrepreneur, but you're right. It comes with a ton of challenges and a ton of pressure. And then it's all on you managing people. And, um, there is absolutely nothing wrong with having a W-2 and then potentially investing in real estate on the side, and I think that gets to focus. If you're really good at your W-2, maybe you focus on that and produce a higher income than you would otherwise potentially. So I think it's not a one size fits all answer, but how would you address that person who is kind of on the fence? They have a W-2 right now. Maybe they're interested in real estate. Any words of wisdom for what they should consider as far as whether to make that leap, and if so, when to make that leap?
Well, I mean, it depends on what they bring to the table, right? If they can raise millions of dollars and, make add value to projects in that way, then yeah, do it. Or if you are an operator, right? Like, and you've operated 50, 100 unit properties in the past, then great. But I mean, this is now you get into the world of all these like guru groups and, which I joined a handful of them back
Hmm.
then.
Hmm.
These are the silly groups that you pay 30 grand, 50 grand to join, and they teach you how to do it all. But in reality, only like 1% of the students are successful
Hmm.
in those things. The only thing I learned was to underwrite deals, which you could probably have ChatGPT teach you that these days,
Right.
and then go kiss the butt of brokers. But that doesn't really work. I mean, it just works through attrition. Like I said,
Hmm.
only the stupid people are still around, still kissing butt to brokers after a couple years. I did a podcast on this a while back ago. I
Hmm.
mean,
Hmm.
it's just a lot of people spend money on these silly programs
Yeah.
that aren't really, like the success rate is 1%. It's
Mm.
silly.
Right.
It's like if you went to college and they told you 1%, you go get a good job. That nobody would do it, but everybody does it for here. And I think that to answer your question in a more drawn out way, it depends on who you are. What's your pedigree? What's your cattle
Hmm.
grade out there, right? Like everybody's different, and that's in my Wealth Elevator book. It's more for passive investors, but it's
Hmm.
it's like where you are in terms of your net worth and your income. If
Yeah.
you're a guy who makes $50,000 or less or $60,000 or less,
Hmm.
I'm sorry, don't follow me. Don't read my book, right? Same thing. Like if you're an entrepreneur type, well, let me get one thing straight. You're not an entrepreneur until you've had an exit or sold
Mm.
off your 100 unit building.
Mm.
If not, you're an entrepreneur at that point, and there's a lot of them out there.
Hmm.
You can find them on LinkedIn.
Right.
Entrepreneur. So the success rate is very, very small for
Sure.
people to go off on an entrepreneurship venture that
Yeah.
make over $100,000 a year doing that, which in that case you better off being at your own day
Right.
job.
Right. Right. Sure. So looking back at your story, and we'll connect some more of the dots as well. But what would you say is kind of the biggest, if you had to say the type of adversity or the a specific time frame in your story for you personally? What was that adversity exactly, and how did you overcome that?
Yeah, I mean, I would say like, when I got some traction and getting back to that word again, traction
Hmm.
means that you have some type of wheel or business thing that you do that creates value
Hmm.
that you start to realize you can rinse, wash, repeat.
Hmm.
Like I'm not just talking about like, oh, buy a rental property. Yeah, that's the oldest trick in the book,
Hmm.
to do.
Yeah.
But my business was, syndicating apartment buildings back in 2016, right? I had done it a handful of times. I also had lost some money and invested with the wrong people
Mm.
several times too, because
Okay.
when you're starting out, you just have access to maybe all these like fake it till you make it operators under $1 billion of assets, which isn't very much in the real estate world,
Mm.
right? Not
Sure.
until you get above that mark. I mean, I would say institutions are more like 5 to 10 billion in assets and
Hmm.
greater.
Hmm.
But I, just that was kind of the leap of faith, was like, had some early successes, also a lot of lessons learned. And,
Hmm.
just the idea of coming to work with my two laptops and doing the day job and the side gig,
Hmm.
which the side gig was getting to be a lot of high stakes for sure.
Hmm. Yeah,
Especially being the person signing on the debt in
sure.
a lot of those projects.
Right.
And that was the issue. It's like, all right, well, now I have to go on my own. But then I think the big adversity for me personally was paying somebody
Mm.
50, 100 grand to do another job, and then I didn't know what the ROI was. So that's what came quickly.
Okay.
Everybody's like, oh, I don't want to spend $30,000 on a rental property. I don't know what I'm gonna get.
Mm.
Well, the stakes are like triple, quadruple when you start to hire people and you don't know what the hell you're gonna get from that person, right?
Sure.
Because the money
Yeah,
just
yeah.
gets vaporized month
Right,
after
right.
month after month.
So speak to that. How did that go? What was that adversity like when you first started hiring and scaling?
Well, I mean, that was, it all happened within like a couple of years, right?
Okay.
Here I am, in my head, I'm justifying, well, I can just stay at this job and make 100 grand,
Hmm.
and I don't want to let that golden handcuffs away.
Yeah.
And then I get rid of that, and now I'm swing it the other way. Now I gotta pay these guys.
Yeah.
I lost the 100 grand income. Now I gotta go negative 100 paying these guys to help
Right.
me do what I need to do.
Gotcha. Yeah.
So that I don't think a lot of people, I mean, I think entrepreneurs, they typically move to that stage pretty quickly. So I
Hmm.
don't think a lot of
Sure.
people talk about this very
Right.
often. But
Right.
for people who have new business owners
Yeah.
or entrepreneurs at that stage, it is a very vital part. I mean, you can't just be a solopreneur and go
Right.
through
It's a team
this.
sport for sure. I always question when people talk about, well, I'm going to quit my job when my, side hustle or real estate investing income matches my W-2 income. And it's like, that's fine to say, but you're still going to lose your W-2 income when you quit. So, I mean, it's not like you didn't have both when you quit your W-2. So there's never some easy, perfect time to leave. There's always something you're giving up when you walk away from your W-2. And it's not to say you couldn't maybe get another W-2 if things didn't pan out or something, but you're definitely going to experience a drop in personal income when you quit your job. So, and then like you said, there's a lot of pressure on you, and then so what roles were you hiring for that you're talking about?
Like all the basic administrative stuff,
Gotcha.
real simple stuff, right?
Sure.
But that's kind of like it, there's a couple like avatars out there, right? Like
Hmm.
if you're making under 60 grand a year, that's pretty easy to replace that stuff, right? So
Yeah.
that's zero adversity there.
Right. Right. Right.
It's like, in fact, that's why I think a lot of people who pay all this money to go to these pointless seminars and
Hmm.
courses, like it makes sense for them, right?
Mm.
And I mean, not to take digs at them, but it
Hmm.
does make sense. The math makes sense. But if you're making 100, 200, $300,000 a year at your
Hmm.
day job, and especially unfortunately, like a lot of those professions, it's based off of your years of experience, right? Like
Hmm.
it's kind of like
Sure.
just I mean, if you also add on like the decade plus of school and all that BS and
Right.
sunk costs with college,
Hmm.
it's like, man, like you can't get out of this thing. And then
Right.
on the side of that is like, well, my identity was an engineer, and then I gotta tell my
Yeah.
parents, like, what the hell do I
Right.
do? My parents don't even know what I do these days. They think I'm just like, I don't know. They know I'm not an engineer. They don't
That's good.
know, you
Right.
know.
Yeah, I have trouble explaining to people what I do. We run a mortgage note fund and I'm a real estate investor. I just say real estate investor, but it's yeah,
Yeah, I
it's
just tell them like a real estate agent. Or, I don't know. I don't care.
people understand that. Yeah. So
Yeah.
walk us through the rest of from say 2018 through, so for the next 7 years, what did it look like for you professionally?
Yeah, so I quit at that time, made the leap of faith, started to keep building, and just I think that the thing to point out is like I had already gotten traction a couple years prior to this at
Hmm.
least, and it was just a rinse, wash, repeat.
Mm-hmm.
We do a deal. Back then, we were buying little 50 unit crappy Class C buildings, and then we were able to step up to bigger buildings as their investor base got bigger.
Mm-hmm.
In 2020, when the pandemic happened, we were like, "Oh crap, what's going to happen?"
Mm-hmm.
Um, Luckily, we all made it through that, right? And
Mm-hmm.
but for us, that was a big growth year because a lot of the institutions pulled back, creating
Mm-hmm.
a gap for us to come in and buy a lot of really prized assets that right now are kind of the jewels of the portfolio.
Nice.
And then, we went over 1 billion of assets in that year
In 2020.
and 2020. So
Yeah,
that was huge, right?
that is huge.
And for people like that's when you're in the industry, people will say, well, that's the magical era for any operators. Like, when you start to the first several years, if you're one of the 1% of people out there who happen, it's just luck, just pure luck. You can't work your way. I mean, you got to stay in the game and work, but
Mm-hmm.
to me, it's just luck.
Can't control it all. Yeah.
Yeah, the brokers control deal
Mm.
flow. You can't write a stupid yellow letter to an apartment owner. That doesn't work. These guys aren't idiots. They go through brokers, especially if you're buying like stabilized assets like how we do.
Mm-hmm.
We wouldn't touch anything that's less than 85, 80% occupancy.
Mm.
We're not those kinds of operators.
Gotcha.
So the brokers control the deals and they're
Mm-hmm.
not going to give it to unproven buyers.
Mm-hmm.
So once you establish yourself and get going and
Mm-hmm.
have closed a handful of properties,
Yeah.
man, they just keep feeding you and
It's like a
feeding you and
flywheel,
feeding
and
you.
it just like you've said traction multiple times, but it just compounds on itself. It sounds like, right?
Yeah,
Mm-hmm.
yeah. So that was like around 2020 when I can
Mm-hmm.
confidently say the flywheel was going at that time, and then
Mm-hmm.
we certainly rode that, and
Gotcha.
then but then yeah, that was just getting. We had traction since
Yeah.
2016. We had investors that trusted us.
Mm-hmm.
Where
Right.
whether you call them the fools, families, and the family, friends, and fools,
Right.
right?
Yeah.
I mean, in a way, like we were new back then.
Mm-hmm. Sure.
Um,
Yeah. So, what about, I know there's, some concerns about multifamily operators having debt that's coming due that they can't refinance. And do you all own any properties that might give you headaches like that in the coming year or two?
yeah, I mean, for sure, for sure. I mean, if people aren't saying they have, they're lying. They're completely lying.
Mm-hmm.
I mean, 2021, 2022 was the peak of the market,
Mm-hmm.
and since things have come down 20 to 30% across the country,
Yeah.
and if you entered in with bridge debt, you're not going to be able to, refinance at current
Mm-hmm.
loan to value standards.
Mm-hmm.
So it used to be you'd be able to get like leverage at 70, 75%.
Right.
Nowadays, you'd be lucky to get it at 55, 60%.
Right. And
So,
and
and
that
then
value may have come down, right?
plus the value dropped out,
Yeah.
right? So the equity portion is gone. It's been vaporized a couple years
Mm-hmm.
ago.
Mm-hmm.
So that's obviously like, lessons learned for us too, right?
Mm-hmm.
Luckily, we were established prior to that.
Mm-hmm.
But in every asset class, there are market cycles, unfortunately.
Sure.
Stock market has market cycles. Right now,
Yeah.
I think we're at the high.
Mm-hmm.
Things have been good there. Residential real estate has market cycles there
Sure.
too.
Yeah.
I'm certainly seeing, I mean, I don't follow it that much because I'm more on
Yeah.
the commercial real estate side and,
Right.
with loans, what created that correction was the loans are on shorter cycles on the
Mm-hmm.
on the commercial side.
Yeah. Sure.
Usually 2, 3 years for the bridge notes, or even the longer notes are 5 to 8 years. So
Right.
it's
Okay.
still, you could have bought a property in 2018, and unfortunately, you may have to refinance in the worst time possible
Right.
with the
Yeah.
40-year high interest rates. But residential, stayed pretty strong.
Sure.
I am seeing some weakness in places like Florida where the institutions went in a few years ago.
Right. Right. Yeah. It
But
is.
I'm not
Very.
I'm not an expert in residential,
Yeah.
so I'm just
Yeah.
you know
Well, it's not, and it's tough. It's very localized, but you're right. There are definitely some signs of weakness in different geographic locations for sure. But I do think it might be a longer cycle than the commercial cycles are, like you said. So, um, dive in a little bit more before I get into some more rapid fire questions. What does it look like? What are you all up to today? You own all this real estate. You have two books. You have a podcast. what do you and your business do, you know, get in the weeds a little bit as to what you have going on today?
Yeah, I mean today, like we stopped doing multifamily deals, like multifamily value add, after the interest rates started to go up in late 2022. So we sat on our butts for 2 years. The reason being is, the prices at that point was still pretty high. And
Hmm.
since then it's come way down, but
Hmm.
still the interest rates, the Fed rates has created a situation where the loan to values on loans are super still aren't very good. They're low and the
Hmm.
interest rates are still high.
Right.
So with real estate, you need the debt and the price to combo. You need both, right? Right now the prices are great, but
Hmm.
the debt sucks. So the deals just don't pencil at the
Got
end of
it.
the day. So I mean, over the last couple of years, we've been kind of scratching our heads and again, but then this is another pivot,
Hmm.
the way I look at it.
Yeah.
Um, so we've been pivoting to private equity, buying businesses where
Mm.
you don't have to rely too much on debt. You can get seller financing,
Mm.
or you can buy these things at such great multiples. I mean, there was a bubble that came out of private equity around the same time as the commercial real estate um, bubble too.
Okay.
So we've been on that angle. We've been
Okay.
a lot of that is more on like finding the operator, right? Like from our relationships and past groups and even our investor base. Like a lot of our investors are business owners. So
I
we've
see.
been kind of focusing more on that. And my thesis here, and this is just my theory,
Hmm.
and that of the Chatham Financial Curve and the CME guys, the guys who predict interest rates. If you guys can just Google their charts, they're not predicting interest rates to come under 3-4%. And we're talking about the Fed rate,
Hmm.
right?
Right.
But
Right.
they're not predicting that to come down
Hmm.
in the next decade. So I think, you and I, we were lucky. We got in at
Hmm.
a great time post
Yeah.
Great Recession, but
Right.
also a time where interest rates were pretty much nothing.
For sure.
I think the next era, next decade, um, is going to be marked by these interest rates that we have now are going to be here to stay.
Hmm.
And perhaps we've lost, if you're doing a SWOT analysis, we lost a big tailwind behind our backs. So that's why we're kind of looking elsewhere into,
Hmm.
private equity and, the stuff that you do too. I think that's going to be making a lot more sense
Hmm.
also.
Yeah.
People can't get traditional debt financing, so they got to go to other
Hmm.
alternatives. So I would not be opposed to doing a debt fund myself
Hmm.
either, right? Like
Gotcha.
I'm just looking at like what's happening in the future, what are the dynamics
Yeah. That
and like
makes sense.
what strategies work, right?
Hmm.
Like with traditional financing and banks pulling back, that creates an opportunity or niche for entrepreneurs to fill that. And that's
Sure.
what a debt fund will do,
Yeah.
privatized debt
Absolutely.
fund.
Before, again, I do have questions of fire at you, but give one example. You don't have to get too specific, but you're saying some of the passive investors who invest with you all in your syndication, some of the LPs may be business owners, and that may be an opportunity for you to purchase a business if there's a good operator in place. Could you walk through maybe like a brief case study, what that might look like?
Yeah, so I mean, it took me a long time to figure this out, but this is essentially how Wall Street investment bankers work.
Okay.
You
Yeah.
have a deal, you have a business, and and a lot of these businesses, like what we're trying to target are things that are just on the brink of, you know, doing really, really well or
Hmm.
expanding. All they need
Sure.
is freaking money.
Right. You mentioned the hockey stick, right? They're right about to explode, but they need money, right?
Right, right. I didn't want to use that word because some people have think that's bad, but
Oh.
we'll go with it. Yeah, we want to find them before they explode, right? Or they need $1 million to go buy their competitor in their market. Take them out and
Hmm.
buy up the whole market, and they just need that money
Hmm.
to
Yeah.
to do that, and that's where the equity, where capital will come in and joint venture on that
Mm.
expansion.
Got it.
And generally speaking, it's a half half. So
Hmm.
if
Okay.
you say like you're a plumbing company, right, Jamie, and then
Yeah. Yeah.
you got your other competitive flow that you want to buy out for $1 million, but you don't got the money,
Hmm.
right?
Right. I
Or
see.
maybe you want to take your chips off the table too, right? Like you don't want to
Yeah,
plow, you're a successful guy, you want to spend the freaking money. You're
yeah.
tired of
Right.
playing this investor game that we all played in our 20s, 30s, and 40s.
Yeah,
And you
I see.
and but you still want to grow your business.
Hmm.
Well, a firm like ours will come in,
Hmm.
work this deal with you where we come in as your capital and you're the operator and we joint venture on the
Yeah,
profits.
gotcha. Makes a lot of sense.
And this is a very repeatable thing, which I didn't, like I didn't go to school on the East Coast.
Hmm.
I was just an engineer.
Hmm.
But this is a very paved process,
Yeah.
in fact.
Right. No, I love that aspect, and same thing. It's one of the things I love about real estate is yes, there are ways to get creative and different ways times to pivot, like you've alluded to, but probably whatever problem you're dealing with and whatever solution you're working on, someone else has done it before or some similar version. So there's a way to copy their success.
Yeah, the biggest problem, any deal, real estate or whatever, is like the people, right? I
Yeah,
mean,
well,
my
you mentioned the
first,
operator, right? And that's, I mean, just in general, finding the good operators. You're absolutely right. I couldn't agree more. It's the people that
yeah,
are drive everything.
yeah, like my first 15 deals I invested as an investor, I've like a few of the operators, so one out of five, right? Were just like, ah, shit, shouldn't have done that, right? But
Hmm.
you don't know, unfortunately, you don't
You
know
don't know.
that. And
Right.
if people who have never done, jumped into partnerships before,
Hmm.
in fact, that's like your marriage, maybe that would have been your only chance at a
Experience.
partnership where you
Oh,
jump into
sure.
bed with each other, literally.
Right.
We all know that doesn't work half of the time, right?
Right.
So I'm actually doing better than y'all with one out of five. But yeah, until bad things start to happen or adversity,
Yeah.
that's you don't know how a partner is.
Hmm.
And I think what we've done is, we've kind of stayed in the game and gotten over $2 billion of past deals, and we know a lot of the bad people are, and obviously we never work with them again.
Hmm.
But it's also led us to a situation where we know a lot of proven people. Like, a lot of my general partner pals, we've gone to battle with each other and we trust each other fully.
Hmm.
And we know other people who have too. And, we start to build this web of people who know each other. And also like, that's how we also find the current set of future partners, right? Like, and investors these days. It's all a referral after a while.
Hmm.
And
Got it.
that's how we also vet the people that we do new business with, right? It just gets better and better um, as you move along. But
Sure.
I don't know. I mean, I don't know what to tell people. Like, unfortunately, you're gonna have to kiss a few frogs when you first
Right.
start out.
Yeah. No, you can't avoid all the pitfalls. And yeah, absolutely. I couldn't agree more. So, you ready for some rapid fire questions, Lane?
Here we go.
What is one thing that people misunderstand about you?
I think people think I'm like a extrovert because I like to talk a lot. I got podcasts, but
Hmm.
I'm quite the introvert. I prefer to, be build stronger relationships with less people, unless it's like my microphone here, where then I can just,
Yeah.
broadcast. But I'm more of an operator type at the end
Gotcha.
of the day, and I need to surround myself with other partners that are more on like the business development side.
Hmm. That makes sense. Yeah, I can identify with that. It makes sense you would have gone down the engineering track too then.
Yeah. The hard part is like, for us that had real jobs,
Yeah.
you spend your 20s and 30s, you got to kind of do everything and you got to stay in somebody else's mode. But when you're an entrepreneur, you actually got to figure out what you do well and do more of
Mm.
it. If not, you're not going to survive.
Mm.
But
Yeah.
now getting into my 40s now, I finally have the freedom to like, all right, what is it I do well? I need to start doing more of that.
Sure.
But like, man, I should have done this a long, long time ago, right? I wish I had parents who put me in a position where I can figure out what the hell I do good and stop doing the crap I don't like to do and I'm doing
Right.
bad.
Yeah, that's really good, advice. But,
Too bad
um,
I'm gonna quit in 10 years anyway. So what the
That's funny. Looking back, we talked about this a little bit, but what's one of your biggest failures and what did you learn from that?
Huh. I don't know. I look at every part of the process was meant to happen
Hmm.
along the
Yeah.
way. The day people say, well, the day job, you spent too much time in there. It's like, well, I learned a lot of I was working for a Fortune 50 company
Mm.
and then the government, several
Hmm.
different types of governments.
Mm.
I learned a lot of, about, you know, business processes, SAP back in the day, and
Mm. Hmm.
so accounting, why they do things, but also just the empathy of being an employee, right? Like I
Right.
tell my folks all the time, like, look, just tell me what you guys think. I was a horrible employee, and like, look, I know how you guys feel, and
Right.
try to make it better for you guys. Look,
Yeah.
because so
Yeah.
that's kind of helped me a lot.
Right.
And then even like, the turmoil in commercial real estate these past few years,
Hmm.
it wasn't easy. We
Sure.
learned a lot. I probably am the only person under the age of 55 that has gone through these types of things. One of the
Yeah.
few,
One of the few. Sure.
unfortunately. But it will definitely change the way we do business in the future and also pivot to maybe even greener pastures, right? Because with real estate, the nice thing is that it's an archaic business. People need a place to live, blah, blah, blah.
Sure.
But when uncontrollable expenses such as in taxes, insurance triple on you, there's
Yeah.
nothing you can do other than just pay it. And
Right.
that's where like investing in businesses yes, it's a lot more riskier, but
Hmm.
there's so many more levers you can pull.
Mm. Sure. Makes sense. It's less simple. Yeah. Um, if you could go back and give your 18-year-old self some advice, what would that be?
I mean, that's why I wrote the book, The Wealth Elevator, essentially.
Hmm.
Like there's different floors to the wealth elevator and there's
Hmm.
different progressions. It's not just get to financial freedom.
Right.
In the book I outline, well, first floor is, you know, being able to save 10, 20%, right?
Hmm.
Just basic personal finance,
Right.
your credit card hacking, but buying rental properties. And that's exactly what I did. I
Hmm.
didn't realize that I shouldn't have bought 11. I should have then stepped up to the syndications and private
Mm.
placements sooner rather than later. And that's the second floor of the
Hmm.
wealth elevator. And then what's on the third and fourth. But like in the book, I have this chart
Hmm.
of when you're on the first, when you're on the second, when you're on the third, and what you
Hmm.
could generally do.
Yeah.
I didn't have that. I didn't have a credit investor, parents or friends.
Hmm.
I had to figure this out on my own, and I didn't realize they were stages and gates
Yeah.
to
Yeah.
the journey.
Gotcha. I like that. That's a lot. I mean, we want things in, we think in binary ways and we want things in two buckets. Like in the note world, it's either performing notes or non-performing notes, but there's a ton of gray in between. There are a lot of sub-performing or reperforming loans out there. Or I talk about, people want to be either an active or a passive investor. And it's like, well, there's a ton of ways in between that you can be kind of a hybrid, or maybe it's not one or the other. So I love that approach. It's maybe doesn't the gurus don't like to claim it like that because it doesn't sell quite as well. But I think it's more real to admit that there are phases and levels, and so
Yeah.
it's not just either financial freedom or not, right?
Yeah. I mean, there's stages to it, right? Like there's a rule like the 70-20-10 rule where 10% is academics,
Mm,
and maybe that's what you hear on podcasts, which books.
sure.
20% of it is other people. And that's kind of why like I think community is a big thing that people miss. That's what I kind of got, right, when I paid all this stupid money for these things.
Hmm.
I got
Right.
community and I was
Yeah.
able to bounce ideas off of each other. And if it was in a note community, I would have that's where you kind of learn, well, here are the gray areas. Yeah,
Right.
you got performing, non-performing, but what do you do with these hybrids in the middle,
Yeah.
right? Those where
Right.
those conversations happen. Of
Right.
course, 70% is the doing, getting out there and doing the freaking thing. But,
Sure.
like it's hard if you're trying, if you I always think like if my kids, how do I bring them up through this progression, right? Like the
Hmm.
10% academics, learn what the definitions are, what is a performing, what is a non-performing note,
Yeah.
and then get them in a room of people doing it, bounce out their ideas, but ultimately you got to do it.
You got to
But,
do it.
you can't just throw them in the water.
Right,
It
right.
doesn't
Makes
work.
sense. Um, what's a challenge that you're facing in your business today that you haven't mentioned already?
I think just that what got us here isn't going to be what gets us to the next
Mm,
place. And the hard thing that I'm in it right now is like, I don't know. I know, we talked a little bit about macroeconomics, right? How,
hmm
where interest rates are going to be and how
hmm
we're going to play it. The problem is, you know, you know where you're going, but implementing, getting traction to get to that direction,
hmm
you don't know what's going to work to
Sure.
get there. I
No,
think, and
that's
then that can be very costly and take time.
right.
And
Makes
that's
sense.
where I think, if you have liquidity, you have time and money on your side, and you
hmm
can take a few attempts to get the ship going in that
Right. Have
direction.
some patience. Yeah. Yeah.
But when that's hard about being a entrepreneur is like oftentimes you don't have the liquidity to make multiple runs at something. And
Right.
it's something like I'm looking at like private school for my kids or college. Like
Mhm.
it's like 50, 100 grand a freaking year, and these guys take 5 years to go. My goodness. And I'm
Right.
like, well, I would kind of rather give them 100 grand three separate times for
hmm
them to screw up three times because the
Mm.
lessons learned in those failures would be good. And then they also have a fourth and fifth failure, right? Too, that they can try again and pivot.
hmm
I mean, surely somebody will get traction in the sixth, seventh time. But
Right.
I don't know. I'm just thinking like, what's the best use for my money? Paying
Yeah.
it to an institutional group or letting my kid have 4 or 5 swings at hitting
hmm
a single or a home run?
Yeah. That's, I like that. Speaking of money, if you were given $10 million tomorrow, what would you do with it?
I buy life insurance and I would just live off of the 4% and call it good.
So you like whole life, high cash value life insurance?
Yeah, yeah, I mean that's part of our strategies that
Yeah.
we teach our folks is the life insurance. But if you don't have 10 million, if you don't have 4 million,
hmm
you gotta roll the dice and you gotta, invest and get a
hmm
higher return. But to me, everybody has the different number for end game. For most of my clients, it's like 4 to 5 million net worth. Once
hmm
you're there, I mean, you could just whole life insurance for 5% tax free. I mean,
It's pretty
that's
good.
that's pretty good, right? I mean,
Yeah.
that's kind of the T-bill and chill. I mean, instead of T-bill,
Right.
we don't do T-bills, but we do the
Right.
life insurance. It's kind of the
Got it.
idea, right?
Yeah. Yeah. Okay. Well, I love it. Um, is there anything controversial, any controversial views you hold with real estate or any, you know, kind of unique approaches you all have taken over the years in your real estate investing?
I I mean, if you followed my journey, like I had like 90, 100% in real estate my first in my 20s and
hmm
30s.
That's
That's what
pretty
got me here.
concentrated. Yeah.
Yeah, that's everything they teach you not to do,
Not to do.
right?
Right. Got it.
But I also think that if you're somebody who's going from 1 million to $2 million or less,
hmm
you have to concentrate what you
Yeah.
got because you don't have very much. I
Right.
mean, yeah,
Right.
it's easy if you had $10 million and just get, you know,
Sure.
sit back and T-bill and chill at 4 or 5% or life
Right.
insurance at 4 or 5% tax free. Like that's
Right.
easy. But
Yeah. And it's like, people love to quote, people like Warren Buffett and it's like that's great. But especially when you get more on the personal side, it's like I'm not sure the average person should be mirroring exactly what he does personally. If your situation is pretty different. So
yeah,
just
I hate
using
those quotes by Warren Buffett. I mean, the guy freaking buys businesses. He's private equity. He's not a
right.
stock guy.
Right.
And Ray
Yeah.
Dalio, I mean, if you look into Ray Dalio's stuff, he's
Yeah.
not all cracked up to be what it is. A lot of the
Mm,
books that they do for him are puff pieces
mm, gotcha.
because they're an investment firm, right? I mean,
Yeah. Right.
and
Right.
that's again, that's
So
why I
he's
wrote my
biased.
book for the regular guy who's
Yeah.
between $1 to $5 million,
hmm
and you're more importantly the first generation multimillionaire.
hmm
What do you do to get on that pedestal of $5 million net
hmm
worth?
Right.
It's you can take what it's like the Bible. Hope I don't offend anybody with this, but with the Bible, like you can take a lot of these things and apply it many, many different ways.
Mm,
Even that
sure.
Rich Dad Poor Dad book, a lot
Right.
of the quotes or the
Right.
quotable things can be
Yeah.
taken multiple directions.
Sure. That's true. Yeah, that's true. Um, And as we're wrapping up here, speaking of books, what is a book or two that you could recommend, Lane?
I would say if you're a new investor, Gary Keller, Millionaire Real Estate Investor,
That's a
I
great
think is
one.
a
Yeah.
good fundamentals book.
Yeah. Hmm.
But I think people read too many books.
Mm,
They should just go out there and do it.
awesome. That's good. That's good advice. Um, what's one question that you wish I'd asked that I have not asked? Anything you want to cover before we get out of here?
I guess what I would say is just we talked a lot about stuff today, but it depends on where you are at.
Hmm.
If you're don't have very much money and you make under 50, 100 grand per year, you have to be an entrepreneur. There is no other way.
Hmm.
If you make over 100 grand, 200 grand per year, you got some choices, and those choices are going to be difficult. I walk that path,
Hmm. Right.
and nothing's wrong about being, more of a passive investor. But if you are, make sure you're investing in good deals with good operators, do
Hmm.
your due diligence, learn how to do due diligence. You don't need to understand how the box works inside, but you need to understand how to evaluate the black box from the outside.
Mm, it's a good way to
Apply
put it.
some infinite banking strategies and then get good on your taxes. And that trifecta is kind of what I kind of focus on for passive investors trying to optimize and go live your life. The
Love that.
goal is $4 or $5 million net worth.
Hmm.
Why? And that's why I'm like, you, in a way, making a business, like when you make a business, you're going to try and way overshoot $4 or $5 million.
Hmm.
You're trying to go for 10, 20, $50 million net worth by the end of your lifetime.
Hmm.
For a lot of people who are more pragmatic, that's like way too much. All I'm doing is wasting my time. If you read the book Die with Zero, it's stupid to
Hmm.
start a business. Just try and race up to where you want to be and just enjoy.
Yeah, that's good advice.
Yeah.
Um,
But if you make under 50 grand a year, you're screwed. So roll the dice and be an entrepreneur. Yeah.
there you go. Lane Kawaoka, where can people find you online?
They can check out my new book, The Wealth Elevator, on Amazon. And then if you guys buy the book, just shoot me an email. We can send you the PDF and the MP3 to accompany it.
Awesome. Well, this has been great. This has been really, really fun. I've enjoyed it's been a very chill, but also super informative and inspiring conversation. So, I definitely appreciate you coming on, Lane, spending some time with us.
Yeah, thanks for having me.
Absolutely. And to the listener, thank you for spending your most valuable resource with us, and that is your time. Thanks, everyone. Take care.
Thank you for joining us on From Adversity to Abundance. We hope today's episode has equipped you with valuable insights and practical advice to elevate your real estate journey. For more inspiring stories and resources, visit us at www.adversitytoabundance.com. If this episode has inspired you, please share it with a friend who could also benefit from our conversation. Together, let's turn adversity into abundance. Until next time, keep building your mental fitness and your real estate empire.